Hey, folks, on today's Rebel's Edge, J-Pal propelled mortgage madness hits as demand for mortgages hits a 2-year high. Biden's Department of Justice takes aim at another monster tech name as the ninth inning enforcement spree continues. And then sleepless in Seattle, the Seahawks take the top spot in the NFC West. What does that mean for the rest of the season? All of that and more on today's Rebel's Edge.
All right. I'll tell you what, Mark, we got a long way to go and a short time to get there. We got a lot to cover, man, between the stocks, and we've got some of the information I know you want to put out there on top of that, plus the sports. I mean, we got ourselves a busy one. I say we jump right in right now. What do you say?
Let's hit it.
Let's do it. All right, for the macro minute, one of the things that you just teased about in the cold open is mortgage refis up 20% in the week. Over week. Absolutely incredible jump. And of course we would. Why wouldn't we, right? I mean, we've been talking about these rate cuts. We got 50 basis points. That does affect the markets. And all of a sudden we start to see that coming in. That's a positive. The other thing into the future still, we're waiting on PCE. And when we get that, then I'm sure there's something else right in front of us next week, because that's the way it's been playing out. But PCE will definitely be something everybody is watching closely.
Yeah, that's the biggest number of the week. We've also got consumer savings and some other consumer-facing second and third order data coming out on Friday. Friday, the big day this week for those prints, and the market continuing to trade in a fairly range-bound, fairly muted on volume. The S&P actually just turned negative just before we went live. I think we're going to continue to see that until Friday, absent anything else. And I think the interesting thing about this mortgage demand, Pete, is what does this mean for the home builders? What does this mean for the Home Depots of the world, the Lowe's of the world that rely on an uptick in housing activity, existing home sales, and that kind of thing? It remains to be seen. We won't get the benefit of that in third quarter earnings, but we might be looking to see those impacts in Q4 earnings that we'll get, of course, in the new year.
Yeah, absolutely. All right, let's jump right into the fantastic futures. We're going to kind of roll because we got so much stuff we got to cover. But I'm going to hit you with this one. How about gold? Is gold look like a tech stock? If you look at gold and you go back to February and look to see where it was trading just underneath 2,000. It was 1992, as a matter of fact. And then all of a sudden you look at it today at 2687. Wow, this thing is on fire. It's been ripping to the upside, and it's a new high, it seems like, every single day. So don't start sleeping on gold because it continues that move. We've seen some unusual option activity that looks like it wants to extend even a little bit further. And oh, by the way, I always like to hit the VIX at least for a moment. I'm going to tell you this. Last week, we were basically in the 17s. We find ourselves right now in the 15s. We might even get lower than that, although depending on how this market starts to shake out this afternoon. But right now we're in the low 15s for VIX.
If we get much lower, that is vol on sale, Pete. I said it yesterday. I'll say it again. And yes, gold, we talked about it when Goldman put a 2,600 handle on it 3 weeks or so ago. I covered it on our show on Newsmax that we agreed with that call. That was obviously the right move. I'm not much of a gold bug, but it's a run that you can't ignore. Not a huge surprise as to the correlation with the Fed easing cycle. That does happen, folks, as we've said in the past. And my quick, fantastic future, Pete, see whether or not it's going to be a cold winter. And, man, I sure hope not, because I don't like the cold weather. But we got an interesting report out this morning from the Association of Natural Gas Producers that they are expecting a pretty big increase in demand this winter, a 4 to 5% increase. So we could see nat gas prices going a lot higher as we get closer to sweater weather, which, man, I'm not looking forward to.
I hear you on that. Mark, I know you've got something for us. You want to give us a little bit of a look-see at something. Give us the info, bro.
Yeah, so today with our Venture Minute, we're going to cover a company that you've heard us talk about in the past. This is, of course, Miso Robotics. This is a company that John and I have been investors and advisors in for over 2 years. The growth in this company has been nothing short of remarkable. This is quick serve robots for the quick serve food industry. And the timing and the demand for this type of technology could not be more apropos with the mandatory minimum wage laws, the issues with the labor market, particularly for these kinds of jobs. This is a company that's continuing to grow. They are completing an equity crowdfunding, a Reg A Plus round at the end of October. This may be the last time that investors will be able to participate in a round like this for this company. So if you're interested in learning more about Miso Robotics and getting involved with this company that is in an explosive, robotics in general, Pete, just an explosive area. Robotics for quick serve. We think it makes a ton of sense. We think you will too. Take a look at it. There'll be a link in the video replay of this where you can go and check it out.
That's awesome, Mark. I love it. Absolutely. Let's just jump right into the stocks right now. We've got SAP. Take a look at these shares. This is a German software company, right? I'm going to give you the good news, but I'm also going to deliver some bad news. So the good news is this. Their cash to debt is about $3 billion. Their free cash flow is north of $9.5 billion. They got a PE of 33 and they got a dividend yield of 1%. You'd say, well, what could possibly be bad news? Well, they've got something. I know, Mark, you could handle this, you being on the legal beagle side of things, but the DOJ is investigating these guys for price fixing.
Yeah.
That's not good. But, the amazing thing is, as of right now, and this all of a sudden, by the way, goes back to 2014, and this is something that we've been watching for a while now. So maybe that's why the stock's only down 3%, and the stock was sniffing right around a 52-week high. So maybe give us a little bit of the insight on what this means from the DOJ.
Yeah, listen, this is not a totally inconsistent with the story that we covered yesterday, right? Very, very similar. An investigation that's been around for a while. The market's been aware of it. Traders are aware of it. This does seem to be a continuation of a Biden DOJ that's in its ninth inning, potentially in its final inning if DJT retakes the White House. And they're sort of cleaning out the closet, right? And moving these investigations that have been sitting around for a while and coming to a head. And I think we might see, as I said, with the story we covered yesterday, I think we might see a settlement coming pretty quickly on this particular matter. That's just my intuition. I have no inside information on that to lead me to conclude it. And again, contrary to what you might think, traders and markets like certainty. When companies put these kinds of investigations, these kinds of regulatory matters, civil litigation, you saw it even with 3M and DuPont with the PFAS litigation, when those settlements were announced, market traders like certainty. They might pay a big fine, but the stock can actually move up on news that it's been resolved. So we'll be watching that carefully.
That's a great point, Mark. And that's why I think with SAP, you can sit on the sidelines, but at some point in time, you might be interested in looking at it again. Take a look at a chart of 3M in this year. It looks a lot different than 3M in previous years. I can promise you that. So just keep an eye on this name, if nothing else. General Motors is next. Now, Adam Jonas is a guy that everybody's heard about for a long time. He knows everything about the auto deal, the auto industry. He's been one of those folks that does a lot of different things. Well, he's out there. He not only downgraded, but he actually also cut his price target. His price target was 47. Now it's 42. This is a stock in GM that's been around forever. It's been between 26 and 50 over the last, call it, year. The interesting thing, Mark, it's getting beat up a little bit today, but not a lot, down a couple of percent. Look at that chart. When I said to Jared earlier, I said, take a look at the chart of this thing. The chart looks like a tech stock. And if you put this up against Amazon, they're pretty similar in a lot of ways. So just keep an eye on what's been going on. GM's done a lot of things the right way. Some things, obviously, not so easy, but they did move back over more towards the gas vehicles. They did monstrous buybacks. All of that has been very positive. But right now, they've got the Chinese and the production that's going on from the Chinese. That's probably the main catalyst right now that I think has Jonas a little bit worried. I'm not as worried as he is about it, but it's something I think that you got to keep an eye on. That being said, GM is still very, very impressive company, and that I still think that there's upside to this stock.
Yeah, I mean, at these levels, there probably is. The other thing that I'd be watching out for, Pete, is there is a brewing storm among port workers on the East Coast that could really foul things up this holiday season, as well as for new car deliveries and things of that nature. That could impact the stock if they're not able to come to a resolution with that labor dispute. Of course, doesn't mean that cars and goods won't be coming to this country. They'll just be coming through Port of Long Beach and the West Coast ports rather than the ports here on the East Coast. Man, what a mess that might have in store. And of course, this is another name, highly sensitive, on the theme of labor to any kind of a potential labor disputes. And we saw a lot of the major U.S. manufacturers go through that pain during the year.
Yeah. And in this auto world, now all of a sudden I want to turn to Rivian. Interesting, down 6% today. Stock's anywhere between $8 and $24. Now it's sitting right around 11. They've got a monstrous cash burn. That's not great, but they did do a deal with Volkswagen, which actually can kind of help them from that perspective. They still are struggling. They still got all kinds of challenges out there. I just wonder, Mark, where do you stand on this one? This is a stock that completely opposite of GM. It's down 50% year to date. It's just not been able to find itself in a very long period of time. I'm looking at the balance sheet. I think that starts to make you get a little bit more nervous all the time, especially with that cash burn. What do you think about this name? I think it's a no touch. I don't really like it to the upside, but what do you think about this name? And are they hitting it for the right reasons?
I not only do I don't like it to the upside, I might like it to the downside and look at some bearish options possibilities on this one, Pete. They're losing $40,000 a car, 40 grand per car, and they're spending $2 billion a year or more on further R&D. Let's also talk about the fact that they've got significant challenges from other, particularly Chinese manufacturers that are much more well-capitalized, have larger market share, of course. So that and the larger macro context that we've been talking about with this massive paradigm shift in the energy story here, with all that power that needs to go to the grid for AI data centers ain't going for EV rollout. All those reasons, I don't like it. I'm bearish. I've never really liked this one. They can only sell the sizzle on the steak for so long. Eventually, investors like you say, where's the beef?
This one was pretty great. I actually got an opportunity to be in the IPO way back when, and it actually traded pretty nicely off of that. And you had to be smart, you had to be quick, and you can't be a pig. That's what I mean. It's boom, 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 and move on, because of everything that you were just talking about. I mean, they have a very large hill still to climb, and it's gotten a lot worse than it once was. So when I'm looking at global payments, you got multiple downgrades, you got price target reductions. This thing is getting hit, it seems like, from everywhere. Mark, when I look at this, though, and I look at a free cash flow of $2 billion, it's got a PE of, call it 8. I don't know. I think this is one, well, it's getting pushed to the downside for certain reasons. I think that some of the reasons are probably right. They missed some expectations here or there. This is an interesting name, though, and I like it for this reason. The pullback that it's made, it's a lot closer right now to the 52-week low than the 52-week high. I like that pullback. And I look at the balance sheet and I look at the rest of the fundamentals of this company. Yeah, they've got some headaches, but I think fundamentally this is a name that could return back to where it was in not too long of a time frame. So for that reason, I find myself much more bullish. Now, would I buy it today? Absolutely not. Don't need to buy it into this kind of selling. But at some point it will turn, and that's the time I think where I'd get interested.
Well, so, I mean, look, certainly you got to be bullish long-term on the sector. Which I like. I do like their technology. I think my concern with these guys is where they stand in the rankings relative to the other global payment type companies and platforms. But yeah, look, at the end of the day, Pete, I love the value investor that you are. The stock definitely starts to look cheap here on the EPS and on the 52-week low basis. So I might look to nibble on this one if it continues to trade down, but not today.
Yeah, I hear you on that. All right. Well, what do we got next? We got some sports, or do we got anything? You got anything you're sliding in here right now?
No. We got some shameless publicity that we'll use at the end, to remind people of some great stuff we got going on. But Pete, I teased it in the cold open.
Yes,
Sleepless in Seattle, no more. Seahawks 3-0, rising to the top of the NFC West. Mm-hmm. You think they can keep up this bull run? What's the team looking like?
Well, it's really interesting. And in the offseason, they brought in a coach, Mike McDonald, who's 37 years old. Hell, I'm looking at their quarterback right now, Gino, and Gino is 33 years old. They're not that far apart. That's an unusual situation. Head coaches normally aren't at that age. It usually takes a process to get all the way up there. And by the way, Pete Carroll was there for 14 years. And now at 73, he's like, you know what? I'm ready to kind of walk away. They were ready kind of for him to maybe walk away. But they had a winning record even last year. So you take a look at this team. You look at Geno Smith. You look at the quarterback and you say, wow, 75% completion. Now, this is a guy who's kind of considered, I guess, a journeyman. I've always liked him. I think he's a gamer when it comes down to it all. He's proven that time and time again. But for whatever reason, he just hasn't been able to stick at too many places except in Seattle, and he's done a great job. They've got a great running game. They got, in my opinion, the most dangerous receiver in all of football because the guy's close to 6'5". He runs like a 4.2 40. He's built like a Greek god. The guy could play tight end. He could play power forward. He could play in any sport, probably not hockey, but almost any sport that I can think of, he'd be very good in Metcalf. He's special. So when I look at the NFC West right now they've played not exactly murderer's row when it comes to their first three, but they weren't expected to be a part of that. So anyway, I think that they look like they're in position right now, even over the next couple of weeks, if they can just steal a game here or there, Mark, people are going to start talking about Seattle and what's going on up there. It is not sleepless up there, that's for sure. Sure is a lot of fun to watch because it's not just San Francisco. It's not just Baltimore. It's not just Cincinnati. All those teams are kind of struggling. And now you've got teams like Seattle and Pittsburgh and other names that people aren't really as familiar with probably in this position. And yet these guys are playing pretty well.
Gotcha. All right, well, let's switch over to the NCAA, going from one coast to the other, Pete. Tennessee looking pretty damn good so far. What are your thoughts?
Well, you know what? I thought this would be a fun thing, just kick it around a little bit. I always like to call it the eyeball test. I mean, there's a lot of things that you can see on paper and you say, you know what, this team looks great. But then when you watch certain teams, they either are even better than you thought or maybe significantly worse. This is a team where offensively, they are one of the best in the entire country. Defensively, they are one of the best in the entire country. So we all hear about Georgia. We all hear about Alabama. Obviously, Ohio State is thrown in there. All of these, by the way, for all the right reasons. These are great football teams. They are historic football teams. They are consistently in that position. They've all got their right quarterbacks. They've all got running game, everything else. I'll tell you what, this Tennessee team, they've got a freshman a quarterback who's 6'6", 230 pounds. Jeez. He is an absolute freak show. He's a great football player. He's got a name that almost anybody you name would say, I don't know how to say his name. I am Avaloya. That's who it is. Sure. Yeah, I'm not going to say it again. But he's thrown for an amazing amount of yards already. They run the ball really well. This is a really good football team that I think is my dark horse push right now, that this is the team that could win the national title. Not just get there, not just be a part of the 12, but could win the title itself. I got one last thing real quick because I know you're going to like this. This is football and a little bit of finance right here. How about this? UNLV, they've got a quarterback, okay? The quarterback has led them into the top 25. They're number 23 in the country right now at UNLV. They're undefeated. They've played very, very well. They've got a quarterback who's got NIL money who ain't getting paid. And the guy's like, hey, guys, I need my money that you promised me, part of the NIL. And these guys are like, well, you know, sounds like they're kind of dancing around this whole thing. So the kid said, you know what? I quit. I'll go to the portal. He can't play at another school during this year, but he now can go to a different school if he chooses. And that's apparently what his choice is, Mark. But this is the negative side of this NIL where there's no guarantees. There's absolutely been no thought when it comes to how does this thing play out. And for instance, if you are at a school that has a lot of NIL money in there and you've promised it, what if some of the guys go, you know what, it's been a bad year in oil. I can't give you the $10 million that I said I could give you. I've got to back out. Now what do they do with these players, right? All these students, I say. Anyway, it's an interesting thing. And this is the first I've seen of this. It's probably happened already, but this is a top 25 team who's losing their quarterback. They're undefeated. And he's basically saying, look, I'm not trying to be a bad teammate. I just need to get paid because that's why I came here. And so far, they haven't worked it out. So as far as I'm concerned, as far as anybody's concerned, it looks like this kid will be a quote unquote free agent portal guy somewhere next year. He can't play the rest of this year.
Hey, listen, Pete, back in May when the three of us were on that famous Rebel's Edge episode all together on Grant's news desk in our beautiful Aventura, Florida studios, you brought this up when we were covering the NIL stuff. You asked me that question from the Legal Beagle perspective. Mm-hmm. What happens when these schools renege? You almost had a premonition that this was going to happen, right? And it will, to your point, happen again. It's not fair to the student athletes. It's not fair to the fans. I think it's going to wind up being, unfortunately, I mean, the kid's got a breach contract a case against them, and a pretty solid one based on what you've told me. So definitely some of the bumps in the road towards this whole NIL program when it comes to college sports. Yeah. So Pete, then just last couple things. By the way, on that point, for those of you that enjoyed watching me, Pete, and John together on the news desk live and in person for the Rebels Edge, well, there's good news. We'll be doing that again on the 9th and 10th of October. We will be together in Aventura, Florida for Grant's 10X Wealth Conference on the 9th and 10th. That will feature Pete, John, myself on stage, sharing wisdom, dropping tips and ideas and trades, along with people like Gary Cohn, Bill Pulte of Pulte Homes and Pulte Family Office, Larry McDonald, Charlie Gasparino, Liz Clayman, and then, of course, a bunch of those folks, including Charlie, Liz, and Grant, are going to be joining us on the 11th of October. You've heard me talk about this before, but I ain't going to stop till we're there. Rebel Mastermind, October 11th, full day of live trading. We are going to be showing you how we do what we do, not just teach the strategies, but how we set up and execute the trades live and in person. We're sold out of the VIP tickets, Pete. Proud to say we've got some executive tickets left. If you haven't grabbed them, please scan that QR code, go to the Market Rebellion website, or call our salespeople, and they will hook you up. And then, Pete, one shameless plug for you. When are you on with our friends at Schwab? Later today, or is that tomorrow?
It was going to be, and then they moved it. And then it was going to be the next day, and they moved it. And it was going to be the next day. I had to move it. So I'll be on this next Monday, which is the final day of September. So I'm looking forward to that. They're always great. And I'll tell you what, Nicole is just one of the great ladies, and I know you know that well, too. She's a beautiful lady who used to be at the NASDAQ back in the day, and now she's down there on the NYSE floor as well.
She used to be Liz. I spent some time with Nicole when I was on the floor on Monday of this week with Oliver, and she reminded me that she used to be Liz Clayman's booker and has known the three of us for a lot longer than any of us care to remember. And one last shameless plug, if you want to see more of us on Newsmax, well, good news for you. I will be on the American Agenda Tuesday and Friday of next week, live in their beautiful studios in New York. That's at 3:30 Eastern time. So that's Newsmax American Agenda, 3:30 Eastern time. And with that, folks, look at that. He already had a graphic ready.
God, that's awesome.
Producer Jared is really pulling out all the stops today. Love it. Thank you, JW. Folks, with that, we're going to let you get back to your day. Trade smarter. We'll see you tomorrow, 1 p.m. Eastern, for another episode of The Rebel's Edge.